I want to start with some tech news from this week, which is that Apple finally confirmed some Bloomberg reporting from a year ago and said it's getting into the buy now, pay later space. And they're doing that with Mastercard. How did this project come about?
Well, so buy now, pay later, let me start a little bit broader. Been around for a long time. We're talking decades, so it's nothing particularly new, but it's a space that got a lot of momentum over the last couple of years.
When you say decades, you're referring back to like layaway at Woolworths?
Brazil, Turkey,
Oh, okay.
It's been around.
Mm-hmm.
So it's been out there, but it has never really scaled globally. So pure plays come along, we all know the names, and it's a good experience, and particularly younger people like it. So we as a payment company, we said, I mean, if card is the answer to everything, then we're clearly missing the point. There's different types of payment options, and we've said this strategy long ago said whatever is out there that's relevant, we will offer it because we believe in choice in payments. So what we did, and I will find my way to Apple because this is the starting point. We created Mastercard Installments, announced in September last year, and said we're going to build it into the network. So basically, at 90 million acceptance points globally, it will be available, which is a very different ballgame than if you are in a bilateral buy now, pay later kind of business model. And that's the path that we can bring. So what Apple announced on Monday this week at their Worldwide Developer Conference is basically they're going to join. They're going to start, or they will launch Apple Pay Later, but it will be on the basis of the Mastercard Installment Program. So who's on there today with us? Who are our starting partners before Apple joined? It's a Barclays, it's a Synchrony, it's an American Airlines, it's a Saks, it's a Cabela's, et cetera, and it's going to be international. So that's the Mastercard piece, and they joined, and we're obviously excited about that. That's how it came about.
We've been very interested in Apple's move into finance broadly, with the Apple Card, et cetera. One thing we had heard from some of the people at Goldman Sachs is that Apple isn't exactly the easiest company to work with. Mm-hmm. They want things done exactly their way, and they generally don't want to share the credit. What made you want to get into bed with Apple on this?
See, we're a network, so we connect buyers and sellers and banks and fintechs. In the end, we're B2B2C. And we'd like to work with people that drive a good consumer experience. In many countries, banks have a lot of trust with consumers. They provide a good experience. So we partner with banks. We partner with fintechs, small and big. This is a particularly big fintech. And with the rise of Apple Pay, many years ago, I think 10 years ago, whenever that ecosystem was created, it really drove the secular shift from cash and checks into electronic payments. So we will partner. Of course, we will partner. But in the end, our network is open for anybody. So we partner with other large tech firms just as much as with the smallest fintech. So
I think there's a little bit of discomfort out there about buy now, pay later. How popular it's gotten among a certain demographic, as you mentioned, and how it makes debt almost a little too easy to accumulate. It's almost seen, I think, like an e-cigarette for the credit industry, like a way to hook a new generation on debt. How do you think about BNPL?
Well, first of all, as I said earlier on, it's another way to pay. You can pay from a bank account. You can pay with a card, debit card, credit card. You can do a loan. Old consumer finance business, it was a particular way of buy now, pay later. Now is at point of sale. Buy now, pay later is a bunch of different flavors. Oftentimes, it's within an existing credit line. So overextension of credit is always a concern. But if it's within an existing credit relationship that somebody has with their lender, then that's not fundamentally a concern. I think what one has to watch is if somebody takes a buy now, pay later loan and it's funded with other debt and it is not generally clear on how it all ladders up, and are consumers at the risk of overextending themselves, that is something to watch out for. We've always advocated for responsible lending. So when we engage with lenders around the world, we're obviously not the lender. And we say, hey, responsible lending rules, got to keep that in mind. We enforce that in our network standards.
So let's shift a little bit. The pandemic has changed a lot of things. One of the newer habits I've seen develop is an embrace of mobile payments. Tapping your phone against a cash register that didn't seem to be there before. Right. You actually go into places now to pick up a falafel or whatever, and stores that once had signs saying cash preferred now have these signs that say contactless payments preferred.
I love it.
How has that changed things for your business?
You know, it changed a lot, and it's not like the flavor of the month. If we look over the last 2 years, where people didn't have the choice on how they're going to pay because cash was not a thing because you were at home, so you needed to do something digital. These habits are staying. We've just done a whole new set of research globally, 40 markets, people 18 above, and we asked the question, what did you do before? What are you doing now? 85% of people have used at least one emerging payment solution in the past year, out of all the people that we surveyed globally. Yeah, that could be mobile money via SMS, it could be click to pay, it could be buy now, pay later, it could be any one of those. And 93% of people that we surveyed said we will definitely use more of that going forward. So stuff is sticking. We see it in the numbers as well. When we look at our data, was a lot of shift to online spend. Now that people go back into stores, it's rebalancing, that's true. But the online spend is remaining at an elevated level. So that is fundamentally changing. Habits are changing. More choices are available because consumers are saying this stuff works for me. And buy now, pay later comes just about at that time, as we just talked about it. So 81% of people that we surveyed globally are saying they have heard about buy now, pay later already. Think about that. So it is top of mind. It's an astoundingly large number, but the research shows it very clearly.
Zooming out for a minute, there's a lot of anxiety about the economy. As we've talked about at this very conference, tech stocks are way down this year. Venture capitalists don't know what to do with their money. Interest rates, inflation, gas prices, et cetera. When you look at Mastercard's business and how people are going out into the world and spending their money or not spending their money, as it were, what are you seeing?
Yeah, so the state of the economy, spending patterns and all of that is, the big headline for me is really the outstanding resilience of the consumer. We're not just talking the US consumer, we're talking the consumer in Europe, we're talking in Asia where the rebound hasn't even happened yet. So people have had the benefit of just savings rate. There wasn't much that you were able to do, and now you are able to do more. You can go and travel, you can go and spend on this, that, and the other. So what we're seeing is strong spending. Yes, when you talk to an economist, they look forward and they think about questions of recession, stagflation, and so forth. We're not seeing it in the numbers at this point in time. You just take a data point. May over year, May 10.5% above on US retail spend versus last year. Next thing that we're also seeing is, while the consumer spending continues to be very strong, what you're also seeing is a true rebalancing in what people spend on. So what do you spend on the last 2 years? You go to a home improvement shop, and then you're going to fix your house, so you do something because you can't go anywhere. Now it's all into services. It's restaurants, it's cinemas, it's go watch a ball game. We just see these categories changing. And it's not the full potential that's coming through yet because you got labor adjustments. That requires a different set of labor, versus people that were working in stores before. So all of that recalibration and then supply chain issues that are associated with that, that's kind of rebalancing as we speak. But the consumer finds different way to spend on, and they keep doing that. And the third point that I want to talk about, which is really coming through very strikingly in the numbers, is travel. People want to make this summer the summer because they missed out on the last 2 summers. We're going to go somewhere. Booking rates are incredibly encouraging, 25% above 2019 levels in terms of booking rates. We're expecting 1.5 billion people more to travel this year than last year. So that's generally a positive picture. I don't have a crystal ball what we're going to see going ahead, and we got to ask an economist. But for now, that's pretty encouraging.
You want to wager any bets on whether we're entering
No.
recession? No. Okay. Mastercard has been dabbling a bit in crypto.
Dabbling?
Dabbling?
It's not a word I would choose.
Not dabbling? No, you're all in? putting all your chips on the table.
I did not say that
Crypto is
either.
obviously having a tough time right now, keeping
Right,
prices afloat. So if you're not dabbling, what is your perspective on crypto
Right.
now?
So earlier on, when we talked about buy now, pay later, why is it relevant to us? Because it's another way to pay. It's a choice. Crypto could be another way to pay. It's interesting technology. It brings in trust of parties that don't know each other. So we have been investing. We have a lot of IP in this space. And we were scratching our head on what problem will it solve and when will it solve it. Use cases that you're starting to look for. Why would you solve something that's already solved? Everyday payments in a store, that is certainly not our starting point. But a question on, could you make cross-border payment more efficient? Possibly you can. So we're leaning in where we think there's an opportunity where our customers are looking for help. We partner there. And we play in three ways. First of all, it's a reality that a lot of people want to invest in crypto assets, and they want to sell crypto assets, and they trade in and out. And that should be as easy as possible with your Mastercard. So we do that, and we do this with partnerships, with a Gemini, with a bunch of Circle, Coinbase, whatever. An extension of that, you're buying a digital good, is NFTs. So we have a partnership there with Coinbase on that point as well. So you want to buy an NFT. If you ever try this by yourself, then it's not that easy. But going forward, it will be quite easy as we roll this out with Coinbase. So that's the in and out. Then there is a massive ecosystem. There's a lot of companies in the crypto space that try to find out what is a good use case. They all have a few set of common issues that we can help with. And that is a question of digital identity. Who is at either side of the transaction? That question doesn't go away, not even in the world of crypto. Another one is compliance rules. There are compliance rules that do exist, but how do you keep track of them? So we made a bunch of acquisitions in the space, and we have a crypto as services part of our business that helps the ecosystem to figure out what the technology in the end can do, but we can backstop that and help with that set of services. And then there is, as you look forward, at any given point in time, there's a government that is thinking about a central bank digital currency. There might be some private sector stable coins. So let's assume at some point in time, these stable coins will happen. And then you've got to ask the question, well, should that be then flowing through our veins, our system in Mastercard as a settlement currency alongside the euro or the dollar? Absolutely yes. We're technically ready to do that. And at this point in time, we're just engaging with governments who are thinking about this, help them make the right design choices. So that's the approach. We want to play, we want to lean in because it's relevant technology. And if I want to be a good partner to any one of my customers, I got to be there in crypto as well. That's why we have a lot of IP and people that know about that.
We are very, very short on time, but we do have a question from the audience. I
Right.
want to sneak in really quickly, and I think I'm going to shorten it so that we can make it a really short answer. What are the most exciting trends in fintech, security, and cybersecurity you see at Mastercard? I'm going to change it to what is the most exciting trend?
What is the most exciting trend?
In security.
Biometrics.
Biometrics. Good answer.
Biometrics. Pay with your smile. There you go.